The market is looking at Bitcoin and the broader crypto ecosystem through a rear view mirror, still anchored to old frameworks, old assumptions, and backward-looking risk models, but innovation doesn't wait for consensus. It doesn't pause until traditional analysts feel comfortable. Innovation moves forward with or without approval, and crypto today is moving faster than many realize. Right now, the market is mispricing risk, misunderstanding adoption curves, and overlooking the structural changes happening underneath the surface. Bitcoin is no longer a fringe asset driven by sentiment. It is becoming a global monetary network powered by technological inevitability and institutional validation. Every cycle brings skepticism, but this time the skepticism is colliding with undeniable data. Expanding hash power, accelerating institutional inflows, global regulatory clarity, and the integration of crypto rails into mainstream finance. The market sees volatility, but under the surface, what we're witnessing is exponential growth. Bitcoin's fundamentals today look stronger than ever. Hash rate continues to hit all-time highs, signaling increasing security and confidence from miners even after the halving. Energy innovation is accelerating as miners integrate stranded power and renewable sources, turning Bitcoin into a surprising catalyst for clean energy infrastructure. Institutions that once dismissed Bitcoin are now building custody, liquidity, and settlement layers around it. These are not speculative behaviors, they are infrastructure-level commitments. That tells us something important. Price may fluctuate, but conviction is deepening. The market is also misunderstanding the magnitude of flows coming into this ecosystem. Spot Bitcoin ETF have already proven that demand is not only strong but persistent. These flows aren't driven by retail enthusiasm, they're driven by institutions reallocating capital into an asset with asymmetric return potential and a predictable monetary policy. When an asset becomes part of long-term strategic allocation, short-term volatility becomes irrelevant. The market hasn't priced in what happens when global pension funds, sovereign wealth funds, and multigenerational capital begin allocating even a fraction of their portfolios to Bitcoin. Crypto more broadly is undergoing a similar transformation. Blockchain adoption is scaling beyond speculation. We're seeing real-world assets tokenized at an accelerating pace. Settlement times are shrinking from days to seconds. Smart contract platforms are improving throughput exponentially. The innovations happening in decentralized finance, AI-driven crypto models, digital identity, and interoperability create a network effect the market still doesn't understand. When technologies compound, impact grows nonlinearly, and this is exactly the moment the market tends to misjudge emerging platforms. Volatility is part of every innovation cycle. The early days of the internet, electric vehicles, mobile computing, they all faced similar skepticism. Analysts underestimated their trajectories because they used linear models in a world shifting exponentially. Crypto is experiencing the same dynamic today. Markets anchored in short-term thinking see chaos, long-term thinkers see creation. Many traditional investors still view crypto through the lens of a speculative bubble, but the data tells a different story. User adoption growing, developers building, institutions integrating, economies experimenting, and young generations treating digital assets as default. This disconnect between perception and reality is where opportunity is born. Markets eventually catch up, but by then, the most transformational gains are already behind us. What's happening now is not the end of a cycle, it's the beginning of a multi-year revaluation as crypto technology becomes embedded in global financial architecture. We're moving toward a world where financial systems are faster, more transparent, more accessible, and more programmable. Bitcoin acts as a decentralized monetary foundation, while broader crypto networks build the layers of commerce, settlement, identity, and ownership on top. This is the direction innovation is pulling us, and innovation has a persistent habit of winning. The market can stay skeptical for a while, but it cannot stay wrong forever. Crypto is not waiting for validation. It is earning it block by block, inflow by inflow, adoption curve by adoption curve. The next phase will reward those who see the exponential forces at work, long before the market finally admits it underestimated them. Ethereum's potential to overtake Bitcoin isn't rooted in speculation, it's grounded in structural shifts that the market is only beginning to understand. The narrative that Bitcoin is the immovable leader ignores the velocity, adaptability, and innovation happening across the Ethereum ecosystem. When a technology evolves faster than the framework used to measure it, markets consistently underestimate its trajectory. And that's exactly what's happening here. Ethereum represents more than a digital asset. It is a programmable financial infrastructure, a global computation layer, and a catalyst for new economic models that did not exist a decade ago. While Bitcoin captures store of value demand, Ethereum captures entire economies. Its capacity to support decentralized finance, tokenized assets, digital identity, gaming networks, and AI-driven applications gives it a breadth of utility unmatched in the digital asset space. Platforms that enable multiple trillion-dollar industries tend to grow in ways that surprise even the most optimistic analysts. The transition to proof of stake was one of the most underappreciated technological shifts in modern finance. Ethereum's energy usage collapsed by more than 99%. Reshaping the narrative around scalability and sustainability. This is not just a technical milestone, this is an economic one. Institutional capital, which faces increasingly strict ESG mandates, can now allocate to an asset that combines security, yield, and environmental efficiency, and yield matters. The staking mechanism has created a new class of digital fixed income, turning ETH into a productive asset, not just a speculative one, that dramatically alters Ethereum's valuation model. At the same time, Ethereum's network effects are accelerating. Developers continue to build on Ethereum at a pace that outstrips every other blockchain. When you have the world's largest community of builders, the innovation flywheel turns faster. Every improvement roll-ups, zero-knowledge proofs, danksharding compounds the value proposition. These upgrades increase throughput, reduce fees, and expand Ethereum's total addressable market. The market often sees these improvements as incremental, but their impact is exponential. They lay the groundwork for millions of users, thousands of applications, and a future where financial infrastructure is as programmable as software. What could propel Ethereum past Bitcoin is not a single break through, but the compounding effect of multiple innovations converging at once. Tokenization is a prime example. Real-world assets moving onto blockchains will not merely be a trend, they will be a structural shift in global capital markets. And the platforms best positioned to capture that shift are those with the most secure, decentralized, and battle-tested smart contract environments, which overwhelmingly point to Ethereum and its scaling layers. As trillions of dollars in assets migrate onto programmable rails, Ethereum's ecosystem could become the backbone of a new financial system. At the same time, Ethereum bridges the worlds of AI, gaming, digital identity, and decentralized governance. These are high-growth sectors with long runways, and they require the kind of flexibility Bitcoin was never designed for. In innovation cycles, flexibility wins. The platforms that adapt quickly, integrate seamlessly, and support diverse applications become the dominant players over time. Bitcoin will likely remain the global benchmark for decentralized monetary policy. Its value proposition is clear, simple, and powerful. But Ethereum represents the next layer of evolution, a network capable of hosting entire digital economies at scale. History shows that platforms with deeper utility and broader ecosystems often outperform early category leaders. Innovation rewards adaptability, and Ethereum has shown an extraordinary capacity to evolve. If Ethereum surpasses Bitcoin, it will not be because Bitcoin failed. It will be because Ethereum unlocked new frontiers of economic activity, and the market finally recognized the power of a platform that is redefining what finance, ownership, and value can look like in a digital age. Bitcoin's position as the #1 cryptocurrency is not simply a matter of being first. It's the product of a design so elegant, so resilient, and so uncompromising in its principles that no other network has been able to replicate it at scale. When you study disruptive innovation, you see a pattern. The earliest breakthrough, if built on the right foundations, often becomes the anchor of an entire ecosystem. Bitcoin is that anchor, the monetary layer upon which the rest of the digital economy is emerging. What keeps Bitcoin at the top is its absolute predictability. In a world where monetary policies shift with political cycles and economic pressures, Bitcoin stands alone as the only asset with a fully transparent, immutable issuance schedule. No committee can change it, no institution can interfere, and no government can inflate it. This certainty is transformative. It allows long-term capital institutional allocators, pension funds, sovereign strategies to model Bitcoin's future in a way that no other asset allows. Predictability becomes a form of trust, and trust is the foundation of monetary value. Then there is decentralization, real decentralization, not just marketing language. Bitcoin's network is the most secure, most distributed, and most censorship-resistant system on the planet. Its incentives are perfectly aligned. Miners secure the network because it is economically rational. Nodes enforce the rules because it is technically simple, and users adopt it because it is financially empowering. This balance of incentives creates a self-reinforcing loop that other networks have struggled to match. Decentralization is not a feature, it is the moat. It is the reason Bitcoin survives every regulatory wave, every geopolitical shock, every technological challenge. And while the market often gets distracted by new narratives, new platforms, and new use cases, Bitcoin quietly continues to do exactly what it was designed to do: store and transfer value across time and borders with unparalleled reliability. The simplicity of its purpose is often misunderstood as a limitation, but in disruptive innovation, simplicity is power. When a technology does one thing exceptionally well better than anything else, it becomes the standard. Bitcoin is not competing in every category, it is dominating the monetary category. Institutional adoption reinforces this position. What began as curiosity has evolved into strategic allocation. Spot ETF, global custody infrastructure, and regulated trading venues have opened the door for trillions of dollars in capital that previously had no entry point into digital assets. These flows do not behave like speculative money. They are sticky, long-term, and deeply researched. As these institutions integrate Bitcoin into their models, they are effectively codifying it as a permanent asset class. Once that shift occurs, the hierarchy becomes difficult to overturn. Meanwhile, countries facing inflation, capital restrictions, or financial instability continue to adopt Bitcoin not as technology, but as necessity. When people choose an asset because it protects them from their own currency, the asset becomes more than an investment, it becomes a lifeline. No other cryptocurrency has achieved this level of global, grassroots trust. Even as innovation accelerates across the broader crypto landscape, Bitcoin's role becomes clearer. It doesn't need complex smart contracts or rapid feature upgrades. It doesn't need to outcompete platforms optimized for applications or scaling. It simply needs to remain the most secure, scarce, and decentralized monetary network ever created. Everything else in the ecosystem, from tokenized assets to decentralized finance to AI-driven economies, can evolve around it. Bitcoin is the foundation layer, the base protocol for value, the digital equivalent of economic bedrock. Innovation builds upward, but it always rests on something. In this new financial era, that something is Bitcoin. And because its design remains uncompromised, its security unmatched, and its monetary policy immutable, It will continue to occupy the number one position not because the market says so, but because the architecture of the future demands it. The debate over whether Ethereum could overtake Bitcoin often comes from a place of excitement about innovation, and that's understandable. Ethereum is evolving rapidly, attracting developers, institutions, and applications that push the boundaries of what blockchain can do. But when you examine the underlying economics, the technological foundations, and the long-term market dynamics, the picture becomes much clearer. These two networks are not actually competing for the same role in the global financial system. Bitcoin is establishing itself as the strongest form of digital money humanity has ever seen, while Ethereum is emerging as the most dynamic programmable platform. Both are transformative, but they operate in fundamentally different lanes. When people speculate about Ethereum surpassing Bitcoin, they often overlook the asset class differences. Bitcoin is built to be pristine collateral, a foundation for the digital economy, the equivalent of modern economic bedrock. Its simplicity is intentional, its scarcity is enforceable, its decentralization is unmatched, and in global markets, the asset with the highest credibility becomes the anchor around which everything else orbits. Bitcoin is earning that status year after year because it resists change rather than embraces it. That resistance is a feature. It gives institutions and governments a level of predictability they simply cannot get from any other asset, digital or traditional. Ethereum, on the other hand, thrives because it changes. It evolves quickly, integrates new technologies, and expands its capabilities at a rapid pace. Its ecosystem is building the future of finance, tokenized assets, smart contracts, DeFi, digital identity, gaming economies, and even AI-integrated applications. That flexibility is extraordinary, but it introduces trade, offers less predictability, more governance complexity, and a faster, moving competitive environment. Platforms designed for innovation must constantly innovate to remain ahead. Bitcoin does not rely on this cycle. It remains relevant through permanence, not iteration. Tom Lee's perspective often highlights an important point. Value does not always flow to the application layer first. Historically, the foundational layer absorbs the most capital because it provides the security and trust on which the rest of the system can grow. In traditional markets, the safest assets attract the deepest liquidity. In crypto, that role belongs to Bitcoin. As trillions of dollars move into digital assets over the coming decades, the portion allocated to the digital gold category is likely to be far larger than the portion allocated strictly to smart contract platforms. Still, Ethereum's growth is undeniable. The shift to proof of stake, the rise of staking yields, and the explosion of Layer 2 ecosystems demonstrate a rate of innovation unmatched by any blockchain. Ethereum could eventually draw as much user activity as a global operating system for finance. But activity doesn't automatically translate into monetary dominance. A platform can be highly valuable without becoming the benchmark store of value. History is filled with examples. The operating system did not replace the reserve currency. The internet didn't replace gold. The railroads didn't replace bonds. Different layers of infrastructure serve different long-term purposes. Both networks will scale, but in different ways. Bitcoin's scaling is monetary, institutional, and geopolitical. Ethereum's scaling is computational, operational, and ecosystem-driven. One becomes the trusted global reserve asset of the digital era. The other becomes the foundation for a programmable, tokenized economy. These are complementary roles, not competitive ones. So the question isn't whether Ethereum will overtake Bitcoin. The question is whether investors understand that these two networks are building entirely different pillars of the digital future. One provides certainty, the other provides creativity. One anchors the system, the other expands it. Both can grow exponentially, but only one serves as the monetary standard, and monetary standards rarely get replaced once credibility is established. If this transformation continues on its current trajectory, Bitcoin will remain the number one asset. Ethereum will remain the number one platform, and the real breakthrough for global markets will be the realization that both roles are essential for the next generation of financial architecture.